Hello and welcome to today's webinar, Employer Impacts of the American Rescue Plan Act of 2021. My name is Jason Powers. I'm the Chief Business Development Officer here at Legacy Brokers and also serve as Employee Benefits Specialist. And today, this webinar is actually co-hosted with a very good friend of ours here from Omni Human Resource Management, Mike Tracy. Welcome, Mike.
Thank you very much. Nice to be here.
We appreciate your wisdom and guidance as we unravel this this massive bill that had a provision in it that certainly has an impact on employer group plans, and we'll be talking about that today. The process for today, it is a session that we'll record and make available upon request. If you've got questions about the topic that we're discussing today, do me a favor and use the Q&A feature in the Zoom app to ask those questions. We'll call upon you or try to answer those live during the presentation. If you've got any technical issues with Zoom, use the chat box to communicate directly with our team, and we'll be sure to help you get things situated with sound and video. If you need to interject anytime throughout the presentation, use the reactions feature, the raise hand feature to interject, and we'll call upon you to ask your question and see if we can get you an answer. After today, if you've got questions, Mike's firm, Omni HR, has been just an incredible resource for our team here at Legacy Brokers, and he is anxious to talk to you or any of your clients. You can also email me or call me directly here at Legacy Brokers. We'll be happy to answer any questions or provide additional guidance where we can. Omni's website is listed there, as well as ours, for any additional insights or resources specific to group health insurance plans and whatever information we might have available on this particular topic after today. And we'll have this screen at the end. So don't worry about jotting that down right now if you want to wait till later. So what are we talking about, Mike? We're talking about the I think the media portrays it as a COVID relief package, right? It's the third or fourth package, the American Rescue Plan Act of 2021. It was signed into law on March 11th, and we're talking about one section of this entire bill.
Wow.
Just one, section 9501 buried in that bill. So I think of all the news media coverage I've seen has all been about the stimulus payments, right? The stimulus checks. There have been obviously the additional round of PPP funding and some of the other things that are in that bill probably get more headline coverage. But there's this section in there, 9501, preserving health benefits for workers. They've allocated $10 billion in funding to essentially provide premium assistance for COBRA continuation of coverage. And that's effective April 1st, and today is April 6th. So passed through Congress on March 10th, signed into law on March 11th, and is effective on April 1st. And it covers a time frame from April 1st through September 30th of 2021. And it essentially makes all of the COBRA premium, including any applicable admin fees, reimbursable to the member, essentially, or in the way that they're handling that reimbursement is really through the employer. And so that's what we want to talk about today and cover. Probably the biggest question that we have, Mike, and this is the one that you and I have been talking about quite a bit, and that's that in the law itself, it really covers who's eligible for that premium assistance. New COBRA qualified beneficiaries, and the law says due to involuntary termination or reduction of hours. But I think the big question that employers have is this supposed to be a COVID related bill? What about voluntary terminations or reduction of hours of employees who chose not to come back, right?
Yeah, that's kind of the big gray area right now, is who actually fits the specific lens and criteria for this. and who doesn't, because people have had people leaving for all kind of reasons. And if it's not COVID related, then do they in fact get the opportunity to participate in this? There's some fine tuning that still needs to be, I think, helped by DOL.
Yeah.
Yeah.
And we're essentially waiting on additional guidance for sure, as we do with most most legislation that gets passed. Once the lawmakers are finished, it goes to the rule makers. But a second category would be those that are currently on COBRA. So individuals that may have a COBRA coverage period that overlaps inside that premium assistance period, the April 1st through September 30th. And then you've got this third category of eligible beneficiaries, and that's the second chance COBRA qualified beneficiaries. And the thing that we were talking about yesterday when we were looking through this stuff is, that can get really complicated when you pair it with the delayed election relief during the outbreak period. So what does that mean? Back in January, the Department of Labor, the IRS, and the Treasury got together and added language to the Federal Register that individuals who may have terminated during the outbreak period, which is measured, I think, from March of 2020 to February of 2021. Those individuals, their 60-day election period, that clock didn't start until the end of the outbreak period, and the end of the outbreak period really hasn't been defined. So there's a lot of questions about whether or not someone who chose not to enroll in COBRA back last year in 2020 can actually take advantage of some of these premium assistance, the premium assistance out of this bill in 2021. So really, what does it mean that once we've defined who is eligible, employers are, they can, but they're not required to allow those COBRA beneficiaries to enroll in a different plan than what they enrolled in before electing COBRA. And the way that I read this, Mike, it's if the plan allows for a change in coverage during that COBRA period, it just has to match what other active employees have, so they can't carve out a separate plan option for COBRA members. Is that the way you're reading it?
Yeah, I would say that wouldn't be wise and probably risky if one thought that you wanted to. So,
well, and from the insurance side of it, the thing that I thought was interesting is, and we found this back when you and I met and had a similar webinar last year when we talked about the CARES Act and some of the stuff that was going on with allowing coverage through the through the layoffs and furloughed employees and all those things that we covered last year. It's one thing for the law to say the law says this, and then the guidance provides this, but what does the insurance policy allow? And something I think employers need to think about is, as these rules are written, and there's language here that employers can allow people to change and enroll in a different plan, make sure that your carrier allows for that change as well. And then the premium assistance, as far as the law is concerned, does not apply to QSERA, which was the qualified small employer HRA. It does not apply to HRA, and does not apply to FSA, so they can't enroll in those coverages if they weren't previously in those kind of plans. But there are, I think, Mike, you mentioned there are some FSA changes in other sections that we don't cover in this 9501 section.
Right. Yeah.
Is that and I know we won't really get into it a whole lot, but what is that? What does that really entail?
So as some of you may have seen, that part of this, not in this particular section, but other parts of the Rescue Plan Act include the ability to increase your dependent care FSA contributions. And so that is another chapter that is going to have to be written, starting with the FSA TPAs and making sure that they have the appropriate documentation and plan changes and so forth in order to allow your folks to increase that. So the FSA is another part of this act just adds more opportunity for people to have to stay on top of stuff. So
Yeah, for sure.
Yeah. One of the things you mentioned that I was going to come back to while it's fresh in my head is you mentioned your carrier in the plan, may have something to do with this. This is, again, legislation to implementation in 14 days. So it doesn't really work that way. And when it does, it's messy. And as Jason mentioned, the rules and regulators have to write their minutia script. But one of the things I think in this COBRA discussion that I would highlight, since you brought it up, is the carrier still has to be a partner, I think, in this discussion, because you want to be sure that the eligible employee, however defined, managed by the COBRA provider, TPA, or administrator, whoever they are, still has agreement by the carrier. Because the last thing that you and your COBRA people want to do is commit eligibility to somebody that the carrier might not agree with. So I think the operative thing, to your point about the carrier being part of this, is to make sure this three-way discussion takes place as these things unfold, so you don't end up with a bit of a train wreck by making a commitment for eligibility that might not be in agreement by your carrier. So I want to bring that up.
Yeah, no, that's a great point.
Yeah.
Other provisions inside this this section, if you will, that apply to eligibility. There's the eligible individuals, or eligible would be those that are eligible for premium assistance, can't also be eligible for coverage under another group plan. And we'll talk about it here in a bit on how how that's policed. And then the subsidy is not available to individuals whose maximum period of COBRA coverage has expired. So if they have, if you got somebody that's on COBRA and they have essentially their COBRA expiration date is set to expire March 31st, 2021, or prior to that, then the subsidy is not available. So Mike, that's kind of the, that's the picture of eligibility. What is an employer to, for the agents that are on, or employers that are on, what do they need to be talking to their clients about, or what does an employer need to be doing, right now?
So as Jason has on the slide, what we're doing and recommending at the same time is at least get our ducks in a row. Make sure there's a strong connection with the COBRA vendor. Do you know when you can expect from them to get the announcements, the model notices, and where is your COBRA vendor in this exercise? The second is what we call the Santa list. At a minimum, we're developing a list of all potentially eligible people who have separated all through last year, and wanting to ensure that we call that the Santa list. Who's separated, who's no longer on the health plan, so that we at least have the list. Once we have the list and the eligibility requirements are more finitely written, then we can go cull the list down. Well, okay, what is the time frame? Who left for what reasons? Can we document it's a COBRA related separation or staff reduction, and ensure that as the eligibility criteria is defined, we can then cull the list down, as opposed to having to start from scratch and go back and figure out who's left. So the other is, look at medical bills and see who's no longer on them, and again, be able to reconcile that same transition so that we know who might be as the eligibility list gets detailed. The other is the payroll vendor is the one who's going to process the tax credits. Now, under previous paid leave from the CARES Act and before, all the payroll systems now have the mechanics with proper coding to make the tax credit against your FICA, so you get reimbursed. Since this isn't actually an earnings, it's a reimbursement, you'll probably want to work with your payroll vendors to understand their mechanics, so that as you begin to submit tax credit, you're doing it in a manner that flows through downstream into your employer tax liabilities. So connecting with your payroll vendor and making sure that you have the process and the coding is another thing. See where they're at, see how fast they're ready, and make sure that they got their ducks in a row. But other than that, unfortunately, the employer, you as brokers, we're kind of at the mercy of those IRS, DOL, and the expert vendors who have to really flush this out, create the hard details, and make sure that, you know, they give us the guidance so we can implement this properly.
It's great. And really what it comes down to is we're waiting on that guidance because there already exists a model notice for COBRA continuation of coverage for health plans from the Department of Labor, but we're waiting on the new notice that really applies to just this period of time, this April 1st, 2021 through September 30th of 2021, barring any extension of that assistance period. But we're really waiting for that model notice because employers do have to send notice. Once they've developed that list, they've got to send notice to all those affected individuals that has to outline the availability of the premium subsidy. If the plan permits a change of coverage, it's got to offer that option to enroll in a different plan. In the law, they mentioned that the verbiage can be added to current COBRA letters, but I think what makes the most sense for employers is probably having a separate document, since it is a temporary assistance. I say that tongue in cheek because we both, we're both, I think we both discussed it yesterday. We don't know if this thing's going to continue on or not, but we feel like it should be a temporary document. And it's got to get sent out within 60 days after the first of the month following date of eligibility, post 4/1. So really, I mean, we've got till May 31st, right, to get notices out to that list of employees or former employees, the affected individuals. The failure to supply notice is treated just like a failure to meet the notice requirements under standard existing COBRA laws today. And then the model notices we're expecting from the Department of Labor are supposed to be no later than 30 days following enactment. And we measured that, Mike, we measured that yesterday, and that is, that's essentially by Sunday, right? So we're hoping, we're hoping to see those model notices yet this week. The other notice, there's a second notice, right? So the other notice is to let COBRA participants know when the premium assistance is ending. And that's got to, again, clearly state the date that premium assistance ends, and then let COBRA participants know that they can continue without the premium subsidy. So if you've got someone whose COBRA period overlaps the assistance period, their COBRA doesn't necessarily end on 9/30, but their assistance would. What is it? The notices don't need to be sent. Oh, if an individual whose coverage ends before September 30th doesn't have to get the premium assistance ending notice, which is, again, that's why it's important to really document that list. And then those premium assistance ending notices have to go out really between 45 days out of the expiration of their assistance and 15 days out. So there's a 30-day time frame where those notices got to go out. We're expecting those from the Department of Labor really for an additional 2 weeks from Sunday. So I think probably that puts us around the 26th, 27th of April. So what are you seeing anything on your side, Mike, that from a notice perspective, anything that employers need to be thinking about now?
Again, I think ensuring that the notice is appropriately sent to participants who should receive it and not confuse people who shouldn't. That partnering with the COBRA provider makes sure that nobody gets caught blindsided by the left hand sending a note the right hand didn't know, which wouldn't happen because you got to tell them where to send it. I think there's just partnership and timing that needs to happen to make this work properly. So that's where we're standing ready. So we can, on my side, for those that we can manage properly.
And you mentioned the credits, Mike. This is the intent. The intent of this law, really, the intent of this premium assistance is that the employer is to really pay for the COBRA premium on a cash flow perspective. They're expected to pay for the premium on behalf of those affected individuals, and then claim it against their payroll tax liability.
Right. Yep. Just as if we've been doing this for, all the other paid time off, COVID time off, emergency family leave acts. As we discussed, the one variable here is that the employer can now credit as well their Medicare as well as their FICA, as those dollar amounts may start to add up, because you may have some significant credits you start taking when you're still offering voluntary emergency sick leave, voluntarily emergency family leave. These are salaries and wages you're taking credit against. Now you layer COBRA on top of that. Some of these credits can be rather significant. So something to watch for.
And so refunds, there is a provision in the law that refunds will be provided for anything over the actual payroll tax due, as it reconciles against that subsidy. And this is the part this is where it starts to get out over my skis, right? So credits can't be claimed if they're already claiming credit under the employee retention tax credit. That provision, that goes back to some of the earlier stuff that we talked about in the CARES Act, right?
Yeah, here's where we're crushing over into, tax. And as HR people, as benefits people, we need a partner at the table here if this gets to be complicated. And I think it would be important that people appreciate the concept of no double dip. If you are getting employee retention credits, if you are getting PPP offsets, that you're treading into water that you might want to be sure you're appropriately addressing with your tax people, to make sure that you can clearly illustrate the appropriateness of each of these credits without double dipping. It'll get complicated.
Absolutely.
Yeah.
And then this next point, Mike, can you speak to this one here?
So, we've read, there's a couple of things I'm going to check. We've read that part of this, although I will admit I haven't scoured the act myself, is that the IRS is being given additional consideration to come back and audit you. So whereas the previous tax credits might have been 3 years for IRS, now we believe it's 5. And that simply means when it comes to anything regarding a credit against tax, you may be subject to an audit 5 years from now, which leads to another important point: how crisp and clear is your documentation? Every family medical leave, every time off leave, every COBRA credit, anything having to do with tax credits is ultimately going to need to be appropriately documented. So ensuring that employers are judicious about the appropriate documentation is the critical factor here, because 3 to 4 years from now, no one's going to remember. And the last thing you want to do is have to come back and deal with, the inabilities to substantiate some of these rather substantial tax credits. So all the more reason to stay on top of your paperwork.
And just like the notices, we're obviously waiting on additional rules to be written there by the governing bodies, the IRS in this case, with how those credits will be administered and how advance payments will be will be administered. So it'll be an interesting few weeks here for employers and for brokers, as well as HR companies, COBRA vendors, and payroll companies.
One of the, so like a lot of you know, we subscribe to different resources, and one of our HR resources even had noted that, you know, COBRA is for 20 and above. State continuation covers the smaller organizations, and it is even conceivable that state continuation will be something that applies to this. It's written in our information that that's an obligation of the carriers to pay for. And so the carrier may have additional obligations to pay for state continuation in qualifying states and qualifying situations. And they will be reimbursed by the government, not you. So this thing will apply all the way down to the smallest of the employers. That, again, more rules to be written, things that we haven't seen detail on, but in fact will also require the small employer to be able to articulate who might be eligible under the COVID-related terms and conditions. So
that's a really great point. And we're seeing a lot of traffic in our, you know, on the broker side in our community. There's a lot of conversation taking place about state continuation, because in some states, the way that state continuation is written, in some states it is our state law will mirror COBRA, federal COBRA law. And, you know, what does that mean? I mean, the federal Department of Labor doesn't have authority over the states, but the states can certainly turn and make that applicable to that small group continuation as well. And like you said, I think we're expecting that to happen for sure. And then that brings a whole new wrinkle into self-funded plans. It looks like we got a couple of questions, and we'll get to those here in just a moment. I think the kind of wrap up the eligibility piece. Eligibility really, again, applies to those three categories: existing or new COBRA qualified beneficiaries, existing COBRA qualified beneficiaries, and second chance beneficiaries. And anybody who's made a payment already for their April premium. We don't have guidance yet from the Department of Labor, so we can't send notices out. You likely have COBRA participants who have paid for their April premium. In some cases, you may have a COBRA participant who's paid for their premium for the next 6 months. And if that's the case, anybody who's already made a payment has to be reimbursed within 60 days of their premium payment. And so we're anxious to get our hands on guidance to make sure that we apply that appropriately. The interesting part to me was, you know, an eligible individual can't have access to other group coverage. Well, if it's a former employee, that's going to be pretty difficult to manage, I think. You know, it's not somebody that the employer is going to have any ability to communicate with on a regular basis, because they're not currently employed at that workplace. So individuals who are ineligible or fail to continue to be eligible for the subsidy have to notify the employer of their ineligibility, and the penalty for failure to notify is $250. If it's deemed to be fraudulent, there's a penalty equal to $250 or 110% of the premium assistance that was paid on behalf of that individual. I think that's going to be pretty tough to police. You know, Mike, you said something yesterday that kind of sat with me, and that was that, you know, you've got an individual out there who is, they're trying to make a decision. Do I take coverage do I pay for coverage through my new employer, or do I make my old employer pay for it on my behalf? And I think that's something that a lot of employers may face a challenge with as they start to identify who to send those notices to. As with any of this premium assistance that's out there, whether it be CARES Act or this stuff under the American Rescue Plan Act, that subsidy does not get counted in gross income for the actual individual receiving the assistance. We got a couple questions that came in, and that was, let's see, Jeff asks, will COBRA end at 18 months or is it extended? Mike, I didn't see anything in there. Did you, about extension of COBRA itself?
No, the synopsis appears the subsidy is for up to 6 months, but there is not any extension of COBRA eligibility because they're referencing unless your maximum COBRA time period is ended. So that would suggest then this is really about the subsidy, not changing the length of COBRA.
Got it. And then the other question that came in was, do self-funded plans for small companies have to participate? And I can say, I think that so this is a federal law, and that means that all plans, all health plans subject to COBRA will have to offer the premium assistance. And what the wrinkle is, though, Mike, is that state continuation provision. So,
Right.
So state continuation implies it is a state law, and many self-funded plans are using an ERISA preemption to really circumvent or preempt state law. They're using federal law to preempt state law. It'll be interesting how some of these small group level funded or self-funded plans react. And that's, again, goes back to why you got to get involved with the carrier. The law says one thing, the guidance is going to say another. You got to trust but verify with that particular carrier. It may vary. We as we found with the CARES Act continuation of coverage provisions, not every carrier was providing the same guidance. Some of the carriers were not allowing for a continuation of individuals who were furloughed or temporarily laid off. So great questions. Other considerations, Mike? We talked about the FSA. There's a provision in the bill that's not part of this section, but there is a provision in the bill about FSA, right?
Yep. People have an opportunity. So work with your FSA experts. There's paperwork, there's plan docs, things that have to happen formally. So I'm sure people are working real hard to make that happen right now.
And as you mentioned earlier, right, it's a 14 days to implement, which is unheard of with many of these laws. But this one has some retroactivity to it. I think that is key for people to recognize that it has an impact and a ripple throughout the plan year. As we talked about, we mentioned the outbreak period for COBRA election notices. The way that I read that, it goes back to November. I mean, you may have affected individuals dating all the way back to November of 2019, which can be, that can make for a pretty extensive list. There is a provision in the bill for credit for paid sick leave and paid family leave. Is that a continuation of the CARES Act, or is that I know we're not going to get into the specifics there, but I'm just curious, was that relative to the same things we saw last year?
It is continuation, however, still voluntary. And even the FSA, I believe, is voluntary. So I will say, though, for I think all of our clients, they're still offering voluntary COVID and paid family sick leave. So yes, again, piling on the credits, which makes, something that you're going to have to account for and continue to track properly. So
makes that documentation all that more important, right?
Document.
Yeah,
but absolutely. Yeah.
And I know we got some agents that have joined us today that are probably already know this, but it increased their open enrollment period for individuals on the marketplace. And there is additional premium assistance for consumers that purchase their coverage through the marketplace. So many of those agents are busy helping individuals and families, really go through and either reapply or apply for new coverage and receive that assistance. Well, Mike, I appreciate appreciate you helping us through, navigate through this. If you've agents out there, or if you've got clients or really prospective clients or groups that you're talking to that have additional questions, Mike, your team is hosting a webinar Friday, which potentially means we might have notices by Friday, right?
Who knows? Yes. I'm sure there'll be some information that between now and then that comes a little more clear, but once a month we do a Let's Talk HR session and just allow an opportunity for people to talk about things that questions they have. We're specifically going to be covering a little bit about return to work, requiring vaccinations is an ongoing conversation that we're having. But certainly any updates and changes to any of this benefit stuff, COBRA stuff, we want to be sure we can bring forth. So this is lots going on. For sure. And as I mentioned, Omni's been a great resource for our office and our team. We hope that people get in contact with you to really to use the resource that's available to them and engage with Omni. You guys are professionals when it comes to the HR side. It's been a blessing to have you in our conversations, for sure. Awful nice of you to say that. Yes, nice to be here. Yep.
Hey, Jason, one thing I want to throw out there too is for the agents, this is a great prospecting opportunity, with Mike's webinar on Friday to invite some of their clients or some of their prospects. So either it's a value add for the current clients or for the prospects to bring them in so they understand what's going on. So you might want to think about that opportunity.
Absolutely. And I mean, these are all conversations that we're having with if you're talking to groups, these are conversations you're having. And it's when you're having those conversations, to have the strength of a professional human resource management firm like Omni in your corner is it's a difference maker. Otherwise you're taking a lot of notes and you're going back to research a lot of things that maybe you're not an expert in, and they really are. This is what they do, day in and day out.
Day in and day out.
Day in and day out. Well, with that, do we have any other questions? I didn't see anything else pop up in the Q&A. Rick, was there anything in the chat that we needed to address?
No, I think that clears up everything.
If anybody's got a question, attendees, you can certainly raise your hand and we can bring you on live and have you ask those questions. Otherwise, we'll give it a little 5-second countdown here, and I'm not seeing anybody raise hands. Going once, going twice. Well, that's all we know about the employer impacts of the American Rescue Plan Act at this point. We certainly expect additional guidance, and as it's available, we'll find a way to pass it along to you. I think we decided in the process of this webinar, we're going to go ahead and post a recording of this webinar on our website under our Insights tab. So be sure to check that for the recording here in the next few days. And if you've got questions, feel free to reach out to Mike and his team, or your appropriate team members here at Legacy Brokers. And with that, we wish you well and have a great week.
Good luck, everybody.